China's economy breaks sharply in Q2. International risks darken outlook. Beijing. China's monetary growth slowed sharply in the second sector, highlighting the enormous toll on activity from large COVID lockdowns and pointing to chronic stress over coming months from a darkening global outlook. Friday's frail statistics adds to fears of an international recession as policymakers jack up interest fees to cut down soaring inflation, heaping extra hassle on purchasers and organizations international as they grapple with challenges from the Ukraine battle and supply chain disruptions. Gross home product in the April-June zone grew a tepid 0.4% from a year in advance, official data showed on Friday. That became the worst showing for the arena's second biggest economic system because the facts collection started out in 1992, with the exception of a 6.9% contraction within the first sector of 2020 due to the initial COVID surprise. It additionally neglected forecast of a 1.0% gain in a ballot of analysts and marked a sharp slowdown from 4.8% increase in the first sector. On a quarter-on-quarter basis, GDP fell 2.6% inside the second area from the preceding area, in comparison with expectancies for a 1.5% decline and a revised 1.4% advantage inside the preceding zone. China's financial system has stood on the brink of falling into stagflation, although the worst is over as of the May-June length. You can rule out the opportunity of a recession, or directly quarters of contraction, stated Toru Nishihama, leader economist at Daiichi Life Research Institute in Tokyo. Given the tame growth, China's authorities is in all likelihood to set up economic stimulus measures from now on to reverend up its flagging increase. However, hurdles are high for PBOC to reduce interest prices further as it'd fan inflation, which has been saved pretty low at present. Full or partial lockdowns had been imposed in most important centers across the USA in March and April, which include the economic capital Shanghai, which saw a year-on-year contraction of 13.7% in GDP within the 2D area. Output inside the capital Beijing shrank to 9% year-on-year in the identical zone. While a lot of those curbs have due to the fact that been lifted, and June information provided signs of development, analysts do no longer expect a speedy economic healing. China is sticking to its hard zero COVID policy amid sparkling flare-ups. The country's property market is in a deep droop and the worldwide outlook is darkening. The imposition of new lockdowns in some towns and the appearance of the highly contagious BA.5 version have heightened worries amongst agencies and consumers. Approximately a prolonged length of uncertainty. For the first one half of the year, GDP grew to 5% from a year in advance. FULLYEAR target beyond reach. China has been ramping up policy help for the economy, despite the fact that analysts say the respectable increase goal of around 5.5% for this 12 months could be tough to attain without casting off its strict zero-COVID method. A poll forecast 2022 growth to sluggish to 4%. Many agree with room for the primary financial institution to ease coverage similarly can be confined by way of issues approximately capital outflows, as the U.S. Federal Reserve, and different economies, aggressively boost interest fees to fight soaring inflation. China's rising customer inflation, though now not as hot as in other most important economies, additionally may also add to constraints on financial policy easing, analysts stated. We believe markets have become overly positive. Approximately increase in H2, Nomura analysts stated. Data on June interest, additionally released Friday, confirmed that China's business output grew 3.9% in June from a 12 months earlier, quickening from a 0.7% upward push in May. Fixed asset investment, a driving force Beijing is counting to shore up increase, grew by means of a higher than expected 6.1% inside the first 6 months of the year from a 12 months in advance, compared with a 6.2% jump in January-May. Retail sales additionally progressed, up 3.1% from a year ago in June and marked the fastest increase in 4 months, after government lifted a 2-month lockdown in Shanghai. Analysts had expected flat increase after May's 6.7% drop. Retail growth suggests that lockdowns have been the number one drag on intake, said Jacob Cook, CEO of WPIC Marketing Plus Technologies, in Beijing. Consumers are still harboring some uncertainty about lockdowns, but with warning signs that destiny lockdowns may not be as strict, we're constructive that consumption will hold to get better in H2. Hard grind, however, challenges abound for consumers and businesses. The employment scenario remained fragile. The national survey-based jobless charge eased to 5.5% in June, from 5.9% in May, consistent with the authorities' goal.